All right, Chad. So today we got Apple earnings. Apple is expecting I was expecting $1.51 per share. EPS on revenue of 89.79 billion. All right, we'll get some music playing here as well. AMD bounced back a little bit. Meta flying up again today. That looks good. Yeah, my portfolio is pretty solid today. Boeing doing well. Nike doing well. We're in Nike. Alibaba. How about this out? I'm gonna take a little bit off of Alibaba. I know they have earnings coming up, and might as well lock some of that profit in. AMD still ripping up too. Yeah, I'm gonna do a timer here. You can see Apple chart on the right. We also have Coinbase earnings today as well. Yeah, till the closing bell, we got about 55 minutes until the close. You see NVIDIA up there. You can also see the Q. I'll probably put 3 charts up in a little bit, but for now, look at the Q just doing really well today, just moving up. We got Apple, Coinbase, DraftKings, SQ, Cloudflare, a bunch of other earnings dropping too. So. Excuse me. AMD up to almost 147s here. Boeing to 200. Yeah, I'm in Boeing right now as well. We took some of it off of there. Baba. But yeah, Boeing flying up. Has Intel started to treat me better yet? Still down in the day, but that's all right. Again, Apple expecting 151 a share on EPS of 151 share EPS on revenue of 89.79 billion. We also got Coinbase. They're expecting 120 per share EPS on revenue of 1.2 billion. SQ expecting 72-cent profit per share on 5.73 billion in revenue. DraftKings expecting a loss of 28 cents a share on 1.12 billion in revenue. Cloudflare expecting 13-cent profit per share on 373 million in revenue. Expedia, Amgen, Bill.com, a couple other ones dropping as well, but those are the big ones. Q breaking highs. All right. Yeah. All right. All right, baby. Love you. Apple at 173s almost. So Apple doing very good today. We're in Apple. We want Apple to go up. We've been in Apple for a long time. Hopefully no Apple dump before closing. Yeah, Apple up a lot today. It's at 173s right now. So Apple is up a lot. We'll see if it holds these gains. Hopefully no Apple dump. Come on, Timmy, don't let me down. Tempted to buy Apple right now. I'm not telling you to buy anything. You always want to be careful, of course. Thoughts on upcoming Palantir earnings? We're going to stream them. They should be interesting. It's an evening earnings report. Palantir is up, I believe, right? Yeah, so Palantir is up the last couple days, I think, huh? Yeah, so Palantir up today, up yesterday. We're green on our Palantir position. We'll hope to keep that up. Yeah, Apple doing really well. Q is up a lot too. Q's up to 428s. If we look at the SPY, the SPY was struggling to break 500s. SPY currently at 506s, so it's looking a lot better. Looking very strong. Looking really solid. We'll see if it keeps it up. Hello? Okay, that's fine. Alright. Alright, love you, bye. All right, so we get a decent little pullback on the SPY. What do you think of Coinbase? Yeah, Coinbase is really interesting. You know, it's had a lot of good news, and crypto, of course, has run a lot. You know, for the second quarter in Aapl, Bitcoin has had some crazy runs over these periods of time, and so I think it's very possible that Coinbase does well for their earnings. Bitcoin also back up to almost 60K, which I think is an optimistic sign leading into Coinbase earnings. It's certainly not a guarantee or definitive in any way because nobody knows what's going to happen here, but I'm optimistic. I hope, again, maybe it's confirmation bias. I hope and so yeah, I hope we get that, you know. All right, so we're checking out some stuff. What's up with Tesla stock today? Tesla, I haven't even looked at it, to be honest, this morning or this evening. Tesla stock's pretty neutral with the rest of the market, in all honesty. Yeah, they're just baiting for retail to buy for a few days, then hedge funds will sell. Well, maybe. What are the expectations of earnings? Which earnings? I did some Bitcoin research in the past few hours. I discovered 264 million worth of ETFs got sold yesterday, mostly by someone called Mr. 100. Today he's bought them all back at 10% discount. I think it's, yeah, I mean, maybe. Yeah, I bought AMD on the dip. So what I did with AMD earnings specifically is I bought the dip, sold on the rip back up to like after I bought it, it ended up bouncing back up to like 155s, and I took out most of my position, and then I waited for it to dip back down, and I added back on AMD, and now I'm in it, basically break even on the rest. So I don't know what it's gonna do, but yeah, Tesla's slightly green today, or at least my position. Yeah, Tesla's slightly green today. I'll take it. Like, we're pretty green in equities overall today. We'll see if it holds, you know. I think the Aapl event is happening next Tuesday. May 7th, yeah. Apple's doing something. New iPads, so it's a let loose event. Apple's expected to announce at least 4 tablets as well as iPad accessories. All right. All right, so again, Apple up to 173s. That's a big kind of resistance level here too with their earnings today. Let me do a poll here. I don't think I've done a poll yet for this. All right, so does Apple beater miss their Q2 earnings? Let me know what you guys think. There's the poll. Vote on that poll. Yeah, of course, the Vision Pro, a big thing for Apple. Remember, tomorrow we got non-farm payrolls and unemployment data coming out. So that's a pretty big report, you know, pretty big report. We'll see what happens. All right. Yeah, so again, Apple still got a ways to go, of course. All right, guys, Apple at 173s. Coinbase earnings are scheduled to drop at 415, so they will beat, in my opinion. I'm in Palantir right now. I hope it goes up. We'll see if it does. All right, guys. So again, Apple. We're gonna take a look at the EPS history, the revenue history at Apple, in just a second. All right. All right, so let's take a look. So here's the EPS graph for Apple. All right, so here's the Apple EPS. So earnings per share is margins. You know, so these are margins for Apple. Like, these are Apple margins, how good they are, like what their margins are. You know, people say whatever they want about Apple, but Apple has great looking margins, Now, they are expecting a decrease here, you know, so Apple, which is, it does look like it's a seasonal decrease. They're expecting a drop down to about right here, you know. So Apple expecting 151 EPS. But again, like when you look at the history of earnings per share, which is again profitability, this is margins history. It's a pretty impressive looking graph. It's certainly not a bad looking graph here. Let me make this a little bit smaller so you guys can see what I mean. It's certainly a pretty solid one. And if you look at the TTM one, the trailing 12 month, it's even more impressive. So Apple, very strong growth company, looks really solid. You know, over the last year, if you want to see what they look like, this is them the last 2 years. This is them last 3 years. This is them. And so they do have a very defined trend. We can also look at their revenue in the same way here. You know, and so let's take a look. Here's their revenue graph using the same site. Again, revenue very similar. You know, they are expecting a decrease in revenue down to about here. Same kind of thing. They're expecting about here for revenue, which is still very solid and still continues the beautiful trend that Apple's had. I never understood why people are so skeptical or bearish on Apple. It's one of the most successful companies in the world. And yeah, it's been doing great. So... Yeah, I think the Apple Vision Pro is going to be one of those things that changes technology for the better, but it might take a couple years to get to tweak it to make it the best it can be, you know. Who hits Tesla first? Tesla. Who hits 200 first? Tesla or Boeing? I'm not sure. No idea. Tesla's closer to it. Meta still doing it really well today. We took a little bit more profit on that this morning, but we're still holding some of it. If they see a loss, the whole NASDAQ will go down. But yeah, for sure. I mean, not necessarily. A lot of the time, companies over the last quarter, this quarter's earnings, a lot of companies did bad earnings-wise and still ripped up. So that doesn't necessarily mean we're going to get bearish action if Apple puts in a miss, at least based off of the trend so far. Yeah, DraftKings. You know, DraftKings, where's the price? DraftKings, DKNG. If it dips enough, I might buy it. But it's still up to almost $50 a share. I don't know. I don't trust it yet. I gotta wait. All right, guys, we got 30 plus minutes until the market closes. Apple just broke highs. So look at Apple high break. Right around 173 was the highs. Apple just ripped up past it, dragging the NASDAQ up with it. So, interesting time, chat. Rivian Got a 827 million Illinois boost for EV expansion, so maybe that'll help EV as a whole. All right, chat. All right, Apple at 173. Let's see if Apple can hold support at 173. I got more people predicting a recession, but like, all right, chat. We got a bit of time. No. Crash is like 800 pips in a day, never ever happened since 2018. Yeah, I mean, we've had little mini crashes, mini corrections. Apple's got the weight to do it though. Apple, one of the heaviest weighted stocks. It's really one of the heaviest weighted stocks in the market, and so we'll see if it holds. But it really is one of the heaviest weighted stocks in the market. Time will tell. But again, their expectations are 151 EPS. 151 EPS. All right, chat. Sorry. Talking to my wife. Anyways, AMD up to almost 157. Bro, OCGN? The D, are you really still bag holding OCGN? I didn't even know OCGN was even like a stock anymore. You know, like, even if it is pumping, the long-term chart looks like this, brother. Like, look, here's OCGN. This has got to be the worst looking stock one of the worst stocks of all time ever. You know, like it's had so many bag holders that have been in this thing for years since it was like way higher. This thing used to be like $10 a share. And the problem is it goes down 95% and then bounces back. What's this little bounce back? You know, then it bounces back, you know, some, but it's down so much already it doesn't matter. You know, it's at 133s right now. So yeah, it's just bag holder stuck in this, desperate for it to go up, unfortunately, and it's probably not going to. Even if it does, like, and if you find yourself investing into the worst companies in the world, you somewhere you were misled. Just to hate to break it to you guys. $151 EPS is almost 25% lower than the last quarter expectation. Right, but again, like we looked at the graph earlier, that's seasonal differences. So like, look, like here is their EPS graph, right? We could look at their EPS graph directly over 5 years. Like, look, here's their EPS graph. And so the trend is, what happens is that quarterly, Apple gets the biggest boost during the holiday season. And so it's no shock that, you know, this quarter, they did really, really well, and they're going to decrease. That's like the normal. Like, look, it happened here, same time period, 12/31/2020, 168, decreased to 140 next one. Next, same seasonality, 12/31/2021, from 210 down to 150. Same seasonality here, 188 in 2022 down to 150 in 2023. Same seasonality. And this one, you know, 211 down to 150. Because of seasonality. That's not really an argument against it. It's actually very consistent trending in that way. Like, we already knew that's going to happen. That's very consistent trends for Apple. Has AMC reached the bottom? I don't know. Maybe. All right, Meta. Starting to fall. Laugh out loud, that is bad. Well, it's bad if you don't understand the broader long-term trend, not branded. You know, it's bad if you want to really paint it in a negative light, but if you look back, again, there's a very famous saying, it goes, when in doubt, zoom out. You know, so like, when you zoom out, again, it's not, what I just showed you is not really arguable. Like, it's the trend is so consistent. Like, the likelihood that every single December quarter we get a huge EPS ratio and then it dips the following quarter, and that the likelihood that that's not seasonality, like normal stock seasonality with EPS, is very, very, very low, right? Again, it's just not really arguable. Like, it's so obvious. It's very self-evident is the point. And so we can act like it's the end of the world, but, you know, this kind of shows otherwise. You know what I mean? Every single December quarter, spike, 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 spike. And this has been going on since 2019. This has probably been going on every quarter. Seasonality, right? Every single quarter after the December quarter, dip, 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 dip. You know? So it's not a surprise we're dipping now after the December quarter. All right, so look at Q pull it back to 426.50. Apple at 173s. Yeah, I mean, I would rather accidentally buy AMD than buy more of AMC. What strategy you guys doing for this earnings call? I use a super duper secret earnings strategy. It's called not buying anything. You know, it's done me pretty well so far. I sit tight with earnings. I'm not about to take crazy big put option gambles like a bunch of gamblers do. Again, those guys just are really looking to have butterflies in their stomach and feel the rush of gambling, you know. Like, I don't care about any of that stuff. The only thing I might do is react. So if Apple dumps 10% or 15% on relatively neutral numbers or something like that, I might buy it up in that situation, you know. But outside of that, I'm just gonna wait. Again, AMD at 156 or 146 right now. Don't be ridiculous, John. Small size, it wouldn't be considered a gamble. It's not about sizing. Sizing is insignificant. It has nothing to do with what I'm talking about. The reason it's a gamble is because there's no freaking edge. I mean, you can straddle, sure. Like that's a strategy you can use. You can straddle, and again, that might work. You know, just trying to play volatility, sure. I'm not even necessarily against that. I'm not talking about people that straddle with small size. That's fine. I don't think that's a gamble. I'm talking about specifically people who take huge size ahead of earnings, or even any big play ahead of earnings. Like I'm talking about people who try to predict the outcome of earnings is who I'm really trying to talk about, because there's no edge in doing so. Not even specifically the outcome for EPS and sales and guidance or anything like that. More so the outcome of the reaction in the stock. Nobody knows how the stock's going to react to earnings. And the people who are taking huge size trying to gamble it away should be shamed, I think, because they're just, again, they're gambling. Yeah, who dat, man? Yeah, I know what a straddle is. It's buying a call and put option at the same time and then letting volatility play out. That's fine. I mean, do what you do. If you make some money, congrats. Oh, you're talking to John, the other John. Gotcha. Yeah, I see, Freddie. It's all good, bro. Yeah, if you do take positions, just trade small. Volatility is real in these moments, so just be smart. Yeah, I'm not a big options trader. I think everybody knows that, but I very famously called it straggle. I very famously called it straggle, like straggle rock, like Fraggle Rock. I called it a straggle for a long time. Nobody corrected me. I blame the chat. Nobody corrected me for a long time. You know, how dare you guys? You're just gonna sit there and let me call it a straggle and not say anything? Come on now, man. That hurts. Yeah, strangle. I mean, I think strangle would be a better name for it anyway. What about selling out the money put options? Incredibly risky. Gamble. More risky than anything else. Probably. Selling options ahead of it sounds like a terrible idea. You know, your risk is infinite. Selling options, you know. Their earnings calls at 5. Would it be safer to just trade options on the S&P and the SPY instead of Aapl? I mean, define safer. Yeah, I mean, I bought some Intel, and again, I think I really just have to be patient. Intel's down, you know, Intel's down like 30% in the last month. Maybe more than that. It's down from $45 to $30, you know, which is 30%. 33, you know, 0.3 repeating technically, but it's down 30+% in the last 1, 2, 3, 4, 5 weeks. So, yeah. I mean, just ridiculous drops. I learned that earnings do mean anything. Don't mean anything, especially after Tesla bet outcome last week. They mean something, but they don't mean what people think they mean. What I mean by that, drink every time I say mean, is what I mean by that is like the reaction to earnings is super unpredictable. You know, So earnings mean something. They're reporting company health, company guidance, company health, company metrics. Those do mean something, but people act like companies report earnings and then they have to go in the direction in which they report. Like, an example is like if a company reports good EPS, good revenue, good guidance, people act like a company has to go up from that report. But if the company went up 20% in the last 5, 6, 7 weeks prior to that, like preceding the earnings report, if the company's up 25%, even if it reports good earnings, good metrics, good guidance, it still might not go up because, again, it's up so much leading into it, right? The whole move's baked in already. And same thing on the opposite side. If Tesla, which it has dropped down, Tesla leading into their earnings report fell from $300 to $150. It's literally down 50% since July of last year. Even though Tesla reported bad earnings, bad guidance, bad metrics, bad EPS, bad sales, it still went up, And so it doesn't really mean, it's not as short term of a reaction as people expect it to be. And it's not as predictable and for lack of a better word, binary, I guess. It's not as binary of a reaction as people think, and that's the biggest mistake people make. It's one of the reasons I tell people not to gamble on earnings, because even if you predict the results correctly, like even if you think they're going to beat EPS and beat revenue or beat guidance, and they do, you don't know which way they're going to go anyway, because again, there's a lot more nuance behind it besides just current quarter results. Like, there's a lot of extension and all this different stuff going on. Algorithms digest the earnings report way faster than any of us, and they see little bitty nuance of wording and everything like that can make them buy or sell or whatever. So just be smart and understand, like, you could try to react to the earnings report, but trying to predict it and take the appropriate trades beforehand is a really, really risky thing that I try to discourage as much as I can. Yeah, Coinbase is dropping at 4:15 technically market time, so still got about 15 minutes before all that stuff happens. But yeah, Tesla had bad guidance, worse than expected guidance, saying still went up. So it's not just guidance. There's a lot of it has been extension. Yeah, but that's because if you look at Amazon over the last, people are talking about Amazon having great results and still hasn't moved. If you look at Amazon, it's basically right at all-time highs. All-time highs are 189s. It's at 185. So Amazon is already around lifetime highs, and that's the point. Is that Amazon, when you look at it, this is the most consistent part of earnings. Amazon is up from $80 to $180 in the last year and a half. So Amazon, if you look at even this year specifically, in 2024, Amazon is up from 150s to 180s. Right, so heading into earnings, even though Amazon did great and did really, really well, they still didn't have some crazy upward reaction. They didn't react negatively, but they didn't react positively either. They're neutral from their earnings report. And again, it's probably because they're up so much leading into it. And so with Apple, you want to keep that in mind. We don't know which way it's going. I don't know, RJ. I don't know, man. What's the point of buying the calls if it won't be worth anything? I mean, yeah, I don't know. I don't like options because of that. I have enough buying power to just buy shares. The problem with options is that you got to hit all these correct conditions, and there's so much things that are going against you. Like, it's just much more rigid conditions in options. Like, time decay will make them essentially worthless if you let too much time pass by. I would rather just keep it very, very simple. Very, very simple. If I buy it and it goes up from where I buy it, I'm green. If it goes down, I'm red. I'd like to keep that simplicity. Options takes that simplicity away, makes it a lot more complicated. You got the Greeks, you got time decay, you got all these problems with them and condition rigidity, for lack of a better word, and it's just not something that I like messing with. Again, I think if you have enough buying power, you don't need to do options and limit yourself to that rigidity, Yeah, long-term options are fine, though. Those are a little bit more standard, though. A little bit more similar to regular shares. Steady incremental gains. Good set of future growth, yeah, for sure. How many times do you trade a day? I don't know. Decent amount. All right, chat. We still have 9 minutes left until the closing bell, and a lot of these earnings aren't technically scheduled to release until after this, right? Here's the list and schedule of the earnings releases after the close. Again, Apple's not scheduled for 4:30. Coinbase scheduled for 4:15. SQ scheduled for 4:05. DraftKings scheduled for 4:25. Cloudflare expected for 4:15. Mercado Libre expected for 4:10, Fortinet expected for 4:05, Expedia 4 o'clock, Amgen 4 o'clock, Bill.com 4:05, Big Bear AI 4:15, US Steel 4:15. So a bunch of earnings dropping today. Apple is obviously the bigger winner. Look at Apple turn here. So Apple dipping quick. I don't know why it's falling down like this, but it is starting to turn. Again, you guys remember, tomorrow we have non-farm payrolls and unemployment. Here is their EPS history, and we can look at their revenue history as well. Same seasonality that you can see in their revenue. Again, December quarter, big dip. December quarter, big dip. December quarter, probably going to see a dip afterwards. But with seasonality, it's not that much of a shock, I think. 8 minutes until the close here, though. All right, so Apple just hit the 200 EMA. Look at it bounce directly off of that at 172.67s. I largely suspect that these pre-earnings moves are largely algo driven. There's no block trades. Apple needs to be up plus 8% because the last one is going to lag. I like the EMA, but it's subjective. They both do different things, and they both do the same thing in a different way. But yeah. All right, chat. 6 minutes. We got about 600 people here live. Now remember, so Apple's scheduled for 4:30, but it can drop anytime after the closing bell here, realistically. So. All right, Apple down 172.60s. All right, guys. So again, 4 minutes left. Apple's starting to pop back up. The Q bounce at the 200 EMA is starting to run. Yeah, we're gonna cover all the major earnings today, chat. Imagine a collab between Polestar and Apple. I don't know if it's gonna beat or miss. Nobody knows. Well, yeah, I'm gonna stream the full call live like we always do. Full call. All right, guys, we got 3 minutes until the close. 3 minutes. How do we feel about DKNG earnings? DKNG is interesting. I think the company has had a lot of good, healthy growth. But who knows what it's going to do short term? Nobody does, you know. Somebody said I have friends in the car industry. Car sales are coming to a halt. All right, guys. Apple at 173 here. We got a minute and a half, guys. A minute and a half. Amazon at 184, so almost 185s. AMD at 186. Meta's at 441s. 146. Yes, I'm in Apple. I've been in Apple, though. You know, so yeah, we're in Apple. You know, here's AMD as well, chat. So we're at 145.60s. Here's Apple. 173s. Closing bell's coming soon in about 1 minute, chat. 1 minute till close. What date comes out tomorrow? So we have non-farm payrolls and unemployment data coming out tomorrow. Very big report. Probably one of the biggest reports of the week outside of FOMC and Apple today. So again, tomorrow we have non-farm payrolls and unemployment data. Big reports for sure. All right, guys, the queue up to 427. Here's the closing bell right now. So here's the closing bell. We still got time. So we're going to put up Coinbase. We're going to put up SQ, DraftKings. Wait for the charts to show what happens here. All right, so here's Coinbase on the right side. Here's Apple on the right side. Here's SQ on the right side. We'll also put up DraftKings, and we'll start reporting these as soon as they drop. Alright, so no excitement yet here, guys. SQ ripped up to $70 though. Alright, here we go. There's the close. Waiting patiently here. I'm gonna put this thing in sub only mode as well, chat. If you haven't already subscribed, hit the notification bell. We appreciate it. Waiting for Apple. We're at 173s. SQ looks like it popped up some though. Coinbase hasn't moved yet. Still waiting here for earnings to release. Most of them are coming out at 405, but some come out at 425, 415, 430. Patiently waiting here. Booking Holdings is out. We're going to put these numbers up on the screen. Booking Holdings, which is BKNG, posted 2039 EPS versus 14 expected. Revenue killed it at 4.4 bill versus 4.25 billion expected. So BKNG did much better than expected. Much better than expected. I'll put this up in chat. But yeah, SQ's starting to move too, though. Expedia down to 132s. Back up to 141s. Amgen is out as well. They posted 396 EPS on versus 387 expected. Didn't show their revenue though. Looks like Expedia is out as well. Apple's not up yet. Still waiting here. EXPE posted revenue grew 8% year over year. Repurchases of 786 million year to date. EPS was 21-cent profit per share. For Expedia, they expected a loss of 22 cents. They're up a lot. Yeah, so Expedia expected a loss of 22 cents. They showed 21-cent profit per share. Expedia up to almost 145 bucks. So Apple, I think, is scheduled for 4:30. They could drop anytime after the closing bell, though. That's the thing to understand, is that like they could drop anytime after 4 p.m. And so we're waiting for Apple, but they're not out yet. We're still waiting on them, sitting tight. I'm gonna put it in sub only mode. Oh, I did already. Hit that sub button, guys, if you haven't already. We appreciate it. All right, Coinbase up to 230s. Look at Coinbase start to go. Coinbase is starting to go. It'd be a little bit early though, and this isn't the biggest move, so I don't know. All right, Coinbase up to 240s. Chat. Expedia is out. Amgen is out as well. Look at Coinbase up to 242s. Coinbase looks like it beat. Now it's all the way back down. Wow. All right, we're gonna look up Coin. Coin posted EPS of 440 versus 105 expected. Way better for Coinbase. I don't know why they're down so much though. That's weird. Revenue of 1.64 versus 1.34. So here's Coinbase's numbers, but I'm not sure why. You know, I don't know why. I don't know why they're down so much. Here's Coinbase's numbers right here. Square looks like it's out. Coinbase is flat. SQ is dumping. Still waiting for Aapl here. I'm trying to confirm these Coinbase numbers because these seem way high, like 4 something higher than expected. It's hard to find though, but I'm pretty sure these are right. Yeah, so it says Coinbase. Okay, here it is. Yeah, so yeah, Coinbase is right. Monster is also out with their numbers. So here's Coinbase's numbers here. 440 EPS versus 1 expected, way higher than expected. Revenue of 1.6 versus 1.34. I'm not sure why they're down. These numbers killed it. Maybe it has to do with Coinbase guidance. We're gonna put these numbers up in the comments as well for the video. Monster Beverage also out with their numbers. 3 billion buyback for MSTR, or MNST, I mean. Look at SQ. SQ's down a lot as well. I'm trying to report all these as we get them, chat, so bear with me, team. Illumina, ILMN is out. They posted 9-cent profit versus 4 cents expected. Revenue of 1.08 versus 1.05 bill. Aapl scheduled for 4:30, so we're just waiting for them to drop. Coinbase finally reacting a little late, but starting to move back up here. Live Nation is out. Coinbase is out. We'll put Live Nation up in chat as well if you want to see it. I'm just kind of putting all the earnings that are out in the comment section so you can see them here. What about DraftKings? Are they out yet? They haven't really moved much. Okay, DraftKings scheduled for a little bit later. What about Cloudflare? FT&T down, Fortinet down a bunch. Again, SQ dipped all the way under 69. Still waiting on Aapl though. Still waiting on Illumina. We do have Coinbase, Monster Energy, and Amgen all out. Bill.com should be out. Let me see. Bill posted 60-cent profit versus 53 expected. Sales of 323.02 versus 306 expected. So better than expected for Bill.com. There's the numbers in the chat. Yeah, Coin did great. I'm surprised it's not up more, but Expedia down a bunch too. I think Expedia beat pretty heavy as well, but ooh, portfolio's looking really good today, man. I don't know why, but Home Depot is why. Netflix. Snapchat, Palantir all doing well. Tesla, Tyson Foods, Walmart. All right, so there goes Apple starting to head up to 174s here. I don't know if this doesn't look like it's earnings related though. This is not really a huge move. So Apple's up a lot, but it doesn't look earnings related. Again, it's not really a huge move. You know. Somebody said Apple reported. I don't think so. This isn't really a big move at all. If they did, we'd see it. Yeah. Apple's not out. Apple's technically scheduled for 4:30, so we might have 20 minutes before Apple really drops. Yeah, Expedia lowered guidance. Yeah, so Apple's scheduled for 4:30. Hey, thanks for the $2 random sticker. Guy, thanks, man. Motorola, who knew they were even a company, man? Motorola out 281 versus 253. Revenue 2.39 versus 2.35. Yeah, Coinbase down under 220s. Starting to dip. Yeah, Coin's out. The numbers might be right below me right here. They could be. I'm not saying they are. They might be though. We had a pretty good time day trading today too. And so again, we day traded on a funded account program called Apex. I truly believe it's what's it's what most day traders should do instead of risking thousands of dollars in the beginning. Everybody wants to day trade and look cool on the internet, but most day traders lose. And so if you put up $1,000, you're probably gonna lose $1,000. If you put up 20,000, you're probably gonna lose 20,000. In futures, there's no PDT rule. You can day trade short, and so you can buy market, sell market. Very similar to day trading stocks. There's just no PDT rule in futures. And again, funded account programs allow you to limit your risk. Apex is a sponsor of mine, but really, really useful. They give you a demo. The base one, it only costs $30 to try the challenge on the base one. They give you a 25K demo. If you can make $1,500 in profit without losing $1,500 first and following their rules and conditions, they fund you $25K with a 90% split. And if you lose it, you're only out $30 or whatever it is, you know, whichever account you use. And they have accounts all the way up to 300 accounts, 300,000 funded accounts. They have static accounts, all this different stuff. It is a great way to learn how to day trade. You're still learning how to trade under pressure. Your risk is just really limited. So if you lose the challenge, you're out $30. But if you pass it, again, 90% split it. Once you pass it and get funded, if you make 10K, you get to keep 9 of that as long as you follow their rules. A great way to learn how to day trade. And again, I think most day traders lose, and so I think most day traders will lose here as well, because most day traders lose wherever they go. It's just a lot. It's a lot easy. It's a lot cheaper to lose here than it is to put up the money up yourself and lose that. So again, if you want to check it out, they're a sponsor of mine. Again, they pay me money. I'm biased because they pay me money. I'm always pretty honest about it. But if you want to use my link, you'll get the max discount using coupon code BT. 2 letters BT will get you the max discount. You can check it out right here. Yeah, SQ up to $70 plus here. I still don't see SQ's numbers though, so I don't know if SQ is just moving with tech or what SQ is doing, but yeah, Bill.com also gave bad guidance as well. All right, so SQ is out. Yeah, I mean, Camden, this is literally my disclaimer, brother. I'm not capping about anything, bro. I'm literally telling people I'm horrible at this stuff. Don't copy me, bro. Listen, I'm one of the top 3 worst traders of all time ever in the world right now. Definitely top 3 worst ever in the world right now. But again, these are my stats for today. Or no, this is my stats for this week, right? So this week on my funded account, this is an actual funded account, I am up about $1,500 gross, or $1,500 net. You can see my accuracy rate. Let me get rid of all this stuff. I was drawing on it earlier when I was showing the stream. But yeah, about 66% accuracy rate, pretty solid. There's my graph. So I'm pretty proud of this week. But again, top 3 worst traders of all time ever in the world. Oh, y'all can't even see it. My bad, chat. Look at me. Look, here's the graph. 65% accuracy rate. You know, pretty solid, I think. Up about 1,500 bucks net, 1,660 gross. Here's my graph. You know, pretty good. I mean, I'll take it. Again, for the top 3 worst trader of all time, these are pretty good numbers. Apple still consolidating sideways here. Yeah, my bad, Tat. No, it's not 1,500 denarii. It's 1,500 pesos, brother. You got to get it right, man. Come on now, dude. Yeah, I'll take it. Yeah, this is on trade debate right here. Apple gonna keep lithium for their batteries to reduce costs? Maybe. Net out? Yeah, I don't think Net did very well. At least top 3 in something. That's right, bro. Listen, I mean, you know, listen. Catches that you can never pass? What do you mean never pass? All you got to do to pass on Apex, on the base one, the 25K one, you got to make 1,500 in profit without losing 1,500 first. It's literally a 1-to-1 ratio, brother. You know, so I mean, hey. Notice the crickets, the silence from the haters as soon as I talk about that, you know. Hey, cheers to you guys, man. If you're one of those people that gets mad when somebody else does well, you're probably just struggling in your own life, and that's okay, man. You know, it's all right. Go hate on a bunch of YouTubers. That's all right. DraftKings is out. Is it really? All right. So again, Expedia down a lot. It's at 125s. Like, my channel's mostly economic reports anyway. You know, like, mostly we cover economic reports. Like, the FOMC meeting, we had like 6,000 people here watching it yesterday. So, like, my channel's mostly about economic reports. I don't even claim to be a good day trader, you know? So, I mean, it's not the biggest hit that they think it is, but... I passed 5 today. Hey, congrats, dude. Look at SQ. Loving life up here at $75 a share. So Block is out with their earnings. Again, Block posted 85-cent profit per share on 72 cents expected. Revenue of 5.96 billion. They expected 5.82 billion expected. There's the numbers right there for SQ. X is US Steel. I'm not sure why people get on here and hate instead of just not getting on here. I know I've never been a hater that much for anybody ever. Like, I've never gone to somebody else's stream just to make fun of them or try to throw them off. Like, you got to really just not have much to do. I don't have time to do that. Like, if I don't like somebody, I just don't watch their stuff, you know? Like, I just don't watch their content. And so if somebody's literally taking their time and energy to do that, I mean, listen. You know, like, you get a feel for it, man. EOG Resources is out. It's at 282 EPS, adjusted EPS specifically, versus 271 expected. Revenue of 6.1 billion, expected 5.92 bill. So again, EOG is the symbol there. SQ still running up. It's at $77 a share. Apple at 173.50s. JPAL yesterday was a little crazy. I don't like earnings season. My edge is attached to momentum, not irrational volatility. Honestly, my biggest edge, like you see these $1,500 in profit. And again, this is abnormal for me. I almost never make this much day trading. Usually I'm trading very, very light, very, very small. So like this $1,500 on Apex is genuinely abnormal for me, like truly abnormal, right? Cloudflare is out. They posted a 16-cent profit versus 13 cents expected. DraftKings is out. They posted net income of minus 142.6 million. They expected minus 137.4 million. Adjusted EBITDA of 500 mil. They expected 4.58 million. That can't be right. It must be 5.00, not 500 million adjusted EBITDA. Revenue of 1.17. Let's put up DraftKings here. I'll put it on the left side. But yeah, so DraftKings is up a lot on this. But again, I don't ever really make this much. I had a hey, thanks, Michael. I appreciate it, brother. U.S. Steel is out. They posted 82-cent profit, 83 expected, so a slight miss there. 4.16 billion rev versus 4.21 billion expected. So misses on both fronts for U.S. Steel. But yeah, so I made this money here. I made this money, right? I almost never make this money. My idea was very simple, and it worked. And I'm going to probably keep trying to use this, and I'm going to start taking larger and larger size. The idea that I had was that like freaking clockwork ahead of FOMC meetings. The day leading into the FOMC meeting, the FOMC meeting is at 2 p.m. Eastern time, typically, right? Leading into that FOMC meeting, there is almost always very, very like predictable price action and choppy behavior, right? So if we look at the QQQ as an example here on the left chart, if we look at the QQQ leading into the FOMC meeting, we almost always get sideways neutral activity. And so the idea that I had was at the opening bell on FOMC day, and really every other major economic report could behave this way, because we do get choppiness from these major economic reports, specifically leading into them. Preceding the economic report, the market can and does very often, more often than not, in my opinion, move sideways and choppy leading into these big economic reports. And so the idea, the light bulb in my head was just like, hey, when we wait for those days and we wait for that opening bell chop, leading into it, we short when we get to the top of the range, and we cover once we get to the bottom of the range. And that's all we did. Very simple strategy, and it works really, really well, to be honest. It works really, really well. And again, I cover every single FOMC meeting. We get thousands of people that show up for them, so I watch them every single time, and this is very consistent. I can't guarantee it's going to work for you. Test it yourself. Figure out how you want to approach it. But that's all I really did leading up to this FOMC meeting. And it worked really, really well, right? And I think it's plausible. I think it makes sense. I think it's somewhat predictable, which I think is a powerful thing, and it can be. So the next time we get some big meeting, again, tomorrow I might do it with non-farm payroll data, because NFP data and unemployment data drops tomorrow at 8:30. We'd have to do it in pre-market as opposed to the opening bell tomorrow, but that's kind of like something that I'm really considering tomorrow leading into this stuff also. And I think it probably would work. But again, speculating, theorizing, no idea if it's really going to work or if it would be sustainable or not, but I think it makes sense. I do think it makes sense. All right. I didn't make 1,500 in an hour. I don't think I did, at least. I don't know. Again, I didn't make all those gains in an hour. I promise you that. Like today, I don't know how much we're up. Let me see. Today, we're up much less than that. This was mostly yesterday ahead of the FOMC meeting. Today, we are up a whopping $95 in gross profit. And we were up more than that. We ended up giving it back. Still at 62% accuracy, though. All right, chat. Here we go. Apple's coming up soon. We got 6 minutes left, roughly. Is it trading on economic news more or less momentum trading? Maybe trading after economic news, but prior to economic news, no. But again, I don't know. Again, define it however you want. This is just kind of something where if we have a big, like, it has to be a big economic report. A lot of the time leading into really big economic reports, the market moves sideways. And so if we could attack the top of the range, shorting the top, buying at the bottom, so forth and so on, I think that makes plausible sense, right? I think that makes sense market-wise, like theorizing strategies. I think it makes sense. You know, again, maybe I'm wrong. Maybe it won't work. I know it doesn't happen every time, and so we just have to have a reasonable expectation for it, I think. But it's definitely something I'm going to continue testing, because I really do like cover all of these big reports, and I do see the choppy behavior in markets happen like preceding these big reports. If you could find what the bottom and the top is, right? But again, the other idea, like the way I approach it is this, right? So say here's the opening bell, right? Say the market opens and it just flies up, like has a huge move like that. It's reasonable to expect that might not be sustainable. And so shorting once we get over those tops, specifically ahead of FOMC meetings and waiting for the pullback, and then buying once we get to the bottom and then waiting for the bounce back. I think those range bound trades do work in those situations. All right, chat. 4 minutes. Yeah, Coinbase is already out. We already covered Coinbase. It's literally right below me. All right, guys. Here we go for Apple. Hit the subscribe button. Hit the notification bell. I appreciate it. Was range trading the day. Nvidia fell 10%. Eh? All right, guys. 2.5 minutes, or 3.5 minutes. We got 2,300 people here live, so we'll see how this goes. Honestly, I'm tired, bro. I have been streaming for the last 2 weeks straight every day. You know, last week we had Tesla earnings, Meta earnings, Google earnings. This week we had Apple, Amazon, FOMC meeting. I'm tired, man. I'm ready for this earnings call to finish. And again, I'm in Apple right now, so I hope it goes up. Let's see if it goes up. We got 3 minutes left. I'm in Apple. I want it to go up. But I'm tired, man. I'm going to enjoy like an afternoon break. All right, guys, we got 2,400 people here live. Subscribe if you haven't yet. Did I do a poll? I did. 50-50 split again. Or no, it's 50-38-12 split. Okay. All right, chat. Here we go. We got 2.5 minutes left. We'll see if Apple's on time. You know, they're scheduled for 4:30. It looks like they're, again, most of the time you never really know what time they're dropping, but they could drop early or later, all that stuff. But again, we'll see. Gotta put my moisturizer on here. I really appreciate your work. Hey, thanks. We try over here. Again, like people label me a day trader. It's a pet peeve of mine. Like I day trade, but my channel, like my biggest streams are mostly economic reports here. So looking at me like I'm a penny stock day trader or something like that is, you know, I mean, I guess you can, but again, like, this is my channel's last 4 videos. You know, jobless claims. This doesn't even include today. Jobless claims. You know, FOMC meeting yesterday. The JOLTS report yesterday. Amazon earnings. Like, none of this is really super heavy day trading related. But, all right, guys. Hey, we got 1.5 minutes left. A little bit less than that, actually. We got like a minute left. Hit the live button next to the play button. Make sure you're fully caught up on stream. Yeah, Apple has a low PE ratio for the most part as well. We'll see how it goes. 1 minute. We got 2,500 live here. Coin did really well on their EPS, slightly better on their revenue, but I think they're down on guidance. All right, chat, 45 seconds. You'll see it when the report drops out. You'll see the price action of Apple change here. Like, that's how you'll know these numbers are out, is you'll see the price action change. All right, here we go. 30 seconds. Really a little bit less than that, but hey. Forward PE is 25. That's pretty good. All right, 10 seconds. Hit the live button. Make sure you're fully caught up. You can put it in fast forward mode if you need to as well. Apple's right in the middle here. Let's see it. 5 seconds. All right, look at the volatility pick up. Everybody's expecting it. All right, it's up. Up to 175. Starting to move a little bit. 176 is for Apple. Waiting here, chat. Apple up to 177s. All right, so Apple is out. They reported revenue of $90.8 billion versus $89.79 billion expected. GAAP EPS of 153. They expected 150. Again, so here is their numbers here. So Apple is out. They beat. They also are going to buy back an additional 11 billion shares and boost quarterly dividend. So these are great numbers for Apple. Great news for Apple. Great numbers. Again, the full call is going to be streamed live. 5 p.m. They killed it. Look at this. Apple's numbers. Apple's flying up as well. I'm in Apple right now. It's certainly helping my portfolio. Apple up to 178.50s, hitting. I'm about to hit 180s. Look at the Q fly up with it on the left side. So the Q's moving up with it. Again, the buyback is really really going to help, and they boost their dividend also. Oh, is it 110? Did I misread it? Oh, I'm sorry. Yeah, it is 110. So it's 110 billion buyback. Crazy. All right, so again, iPhone sales. We're going to start putting some metrics up in chat here. We're going to start putting some metrics up in chat. So just look at the chat. We're going to start dropping these numbers. Again, Mac sales came in at 7.45 billion. iPhone sales came in at 45.93 billion. Again, we're dropping these numbers in the chat as we speak. Wearable sales at 7.91 billion. Again, we're dropping these numbers in the chat. You can see them in the chat. Authorized 110 billion buyback. 2024 services sales at 23.86 billion. GAAP EPS, again, better than expected. 110 billion buyback. They're doing the board okay to 25 per share, 25 cent per share divvy. Authorized 110 billion buyback. So you can see all the numbers in the chat. Again, Apple at almost 180s, tapped 180s, 4 cents under 180s at 179.96. Yeah, I don't see the guidance numbers yet. iPad sales 5.56 billion versus consensus of 5.89 billion, so a little bit lower than expected second quarter iPad sales. Oh, GameStop did pop back up, almost up to $13. All right, so again, Apple 180s now, chat. Again, Apple America's revenue came in at 37.27 billion versus Europe at 24.13 billion, China at 16.37 billion, Japan at 6.26 billion, Asia at 6.72 billion. Total net sales came in at 90.753 billion. So good revenue there. Yeah, we'll see what the call says, guys. I'm ready for it. Again, I'm ready for it. We'll stream the entire thing live. We'll put the countdown up. Yeah, we got about 25 minutes left into the call. So, but yeah, very good numbers for Apple. I don't see any guidance numbers yet, but that's okay. We'll probably see them during the All right, so today Apple is reporting revenue of $90.8 billion for the March quarter, including an all-time revenue record in services, said Tim Cook, Apple CEO. During the quarter, we are thrilled to launch Apple Vision Pro and to show the world the potential that spatial computing unlocks. We're also looking forward to an exciting product announcement next week and an incredible worldwide developer conference next month. As always, we are focused on providing the very best products and services for our customers and doing so while living up to the core values that drive us. Again, quoting Luca Maestri, thanks to the very high level of customer satisfaction and loyalty, our active installed base of devices has reached new all-time highs across all products and all geographic segments, and our business performance drove a new EPS record for the March quarter. Again, that was Apple's CFO. He's still quoting him saying, given our confidence in Apple's future and the value we see in our stock, our board has authorized an additional $110 billion for share repurchases. We're also raising our quarter dividend for the 12th month in a row. Apple's board of directors has declared a cash dividend of 25 cents a share payable of the company's common stock, an increase of 4%. The dividend is payable on May 16th to shareholders as of record as the close of May 13th. The board of directors has also authorized an additional program to repurchase again up to $110 billion of the company's common stock. And let's get ready here. So 25 cents a share dividend. Look, I tell people all the time, like for whatever, I don't know what goes through people's heads. I don't know if they're swayed by media or sentiment, but like shorting the strongest companies in the world is dumb. Like, I get it, people want to be Michael Burry. It's just dumb. Like, it's not the biggest edge in markets in general is investing in blue chip companies and broad market index funds, long-term investing, right? You're almost guaranteed to make money if you hold long enough. And so I'm not going to bet against that edge. That's silly. I don't care what kind of marketing, whatever is out there. These are the strongest companies in the world. They're worth so much money. And I think people have to be objective about that edge. I'm not going to trade against the biggest edge in markets, and I think it's silly to do so. But hey, where's my stevia cola? Apple over 180s at 181s. Again, the earnings call is coming soon here, chat. I wouldn't short any of the Mag 7 personally, but yeah. Again, you got to understand, listen, the market, the S&P 500 gives you on average roughly 10% a year. On average, right? Not every year. That includes crash statistics. And so what that means is that on good years, you're going to do much better than 10%. On bad years, you're going to do much worse, right? But it averages out to about 10% over time. It's one of the reasons last year we did what? We did like 24% in the S&P 500. Mostly through tech stocks like the Magnificent Seven, Nvidia, Apple, Amazon. And so betting against that edge is ridiculous. Even if you're going to have to be very lucky to catch the crash. And again, I'm here every day. Crashes are wildly overpredicted. Every major economic event, somebody's saying the market's going to crash, and it almost never does. And at this point, it's become like a broken record. Eventually it will. So because if you keep throwing darts at a dartboard, eventually you're going to hit it. But again, betting against the strongest companies in the world is silly, especially Apple. Apple is one of my favorite investments, especially Apple, because Apple's just really strong. The majority of the people in the world, or a majority of people in the country, have an Apple device. Young people love Apple. They don't like Samsung. Again, I got a 14-year-old daughter. I could give her the newest, coolest Samsung ever, and she would rather use a 5-year-old iPhone. And so, yeah. I think you got to look at sentiment long-term for Apple and understand that betting against it is even if you're right, I'm not saying you can't make money doing it. I'm saying the edge is low. Yeah, exactly. Same. I'm all right. Again, you got to look at their actual, here's their EPS graph, right? So this is, again, here's their revenue. This is their long-term graph. I'm not going to bet against this company. It's silly to. Here's a quarterly graph. Does anybody really think that's a good graph to short? Same thing with the TTM revenue. This is revenue here. There's no way I'm shorting that. Same thing with EPS, right? Earnings per share is margins. Here's Apple's margins. If you zoom out to 5 years or all time, Yeah, I'm just not gonna bet against this. That's you know. We'll see if it holds. It might not even hold. I don't know. I'm in it right now, so I'm of course happy about this gain, but we'll see if it holds. Again, we got 20 minutes left, chat. 20 minutes left. Apple Q2 earnings call is gonna start soon. 20 minutes left. Yeah, I'm gonna hold it. I'm not gonna sell it. Yeah, short something short term is fine. I'm not judging you for that. I short the S&P 500, the NASDAQ regularly in day trading. I'm just not about to short them long term. I think that's just a low edge bet. You know, for lack of a better word, I've always called it a sucker's bet. It's something that like rookie traders end up doing because they watch The Big Short or something, and you know, they think it's a good idea. Usually, it's not. Everybody wants to be contrarian and then the next big market crash predictor. But again, because of that, crashes are wildly over predicted, and it dilutes them to where it's hard to tell if this is just another person crying wolf, so to speak, you know, or if this is legit crash, you know. And again, a lot of people that are doing that don't realize that they're doing it. They just they think it's genuinely about to happen, and then it doesn't, and then they cry manipulation or whatever it is. But yeah. No, I short every day, right? I'm not against short traders. What I'm saying is, like, if you're shorting the Magnificent Seven long term, I couldn't imagine a worse investment to get in. What do you think about CVS, Starbucks? I think Starbucks is down a lot. Intel is down a lot as well. I ended up buying Intel. While it's not a huge position, I did dip buy it. I think Intel, hopefully it's going to bounce eventually, but I might be wrong. You know, I certainly could be wrong. But I did buy the dip on Intel. Look, Apple back up again to 182s here, chat. 182s for Apple. Huge movement here. Look at the Q break highs as well. So again, there's Apple's numbers. Back up to 183s. And again, if you do want to day trade, if you do want to short, do it in day trading. I'm not telling you to short anything. But again, in the futures market, you can day trade, short, buy market, sell market, all that good stuff. No PDT rule. Again, here's my stats this week. I'm up a lot this week, specifically because... Again, I use that choppy strategy. Again, leading into big economic days like the FOMC meeting, a lot of the time we get chop. And so one of the ways that I took advantage of this is at the opening bell, I've been attacking chop leading into it, and it works really, really well. Or it has worked really, really well for me. And so an example of this is like, this is one of the days I made a lot of money. I would short at the top, short at the top, short at the top, short at the top, buy at the bottom, buy at the bottom, buy at the bottom, you know, and do it like that, right? And attack these type of moves. This has worked really, really well, especially leading into the FOMC meeting yesterday. So leading into the FOMC meeting yesterday, we got really choppy behavior in markets, really choppy behavior. And that's not a shock. That happens usually with every major economic report, right? So leading into the FOMC meeting, we did the same thing. We would short at the top of this range, cover at the bottom, and just kind of attack a neutral sideways range. Doing so, we were able to build up a decent profit on a funded account program called Apex. This is one that we're funded 50K in. Again, you can kind of see we are up about 1487 in profit. 1487. We got an accuracy rate of about 64%. About 64%. You can see my graph down here as well. I'm not sure what changed. Better make sure I'm not in anything right now. I don't think I am. Okay, yeah, we're not in anything. Okay, good. But yeah, not bad here, not bad. So again, this is a funded account program. They give you a demo. They test your skill. If you pass the test with the demo, they fund you between 50K or between 25K up to 300 with a 90% split. And again, I think most day traders lose. I think most day traders will lose here as well because most day traders lose. Doesn't matter where they go, but it's a lot cheaper to try this out. If you lose, the base one's $30. If you're good enough to pass it, you get a 90% split in funding and futures, and there's no PDT in futures. Patterns are very similar to blue chip stocks. I can basically day trade the SPY and Q price action and what's called the NASDAQ, the NASDAQ E-mini and the S&P E-mini. And you can see how similar these look. Like, look, here's Apple on the right. Here's the QQQ, which I can basically trade this in futures, the NQ. So this is what I do trade in futures, is this right here. Look how similar these look. But I can day trade this left side on these funded account programs. No PDT rule, right? And again, they're a sponsor. I'm biased. They pay me money. And so, you know, they pay me money. I'm biased. If they paid you money, you'd be biased too. But I'm always transparent about it. Understand CFTC 4.41, all that other stuff. There's the link. Check it out. Yeah, Apple flying up right now. There's the NASDAQ ripping up as well. Apple up to 185s. Oh, I'm top 3 worst traders of all time ever in the world, P. New here, you provide amazing information. Hey, thanks so much. I appreciate it. How do you think Coinbase earnings will do? Coinbase is out. Personally, I think Coinbase might show, personally, again, I think Coinbase, I don't know exactly what their earnings are going to show up as, but I think Coinbase could, if I had to make a wild guess, I think they might show up at $4.40 EPS versus their expectation of $1 EPS and revenue. I don't know. Let me think. Maybe 1.64 billion in revenue versus 1.34 billion expected. I mean, that's just a wild guess, but yeah, I don't know, man. We'll see what happens. We'll have to wait for Coinbase to drop. Apple up to 184s. Let's see if it continues. Let's see if it holds that 180 level here. That's a big psychological level. And so again, we'll see if it holds. We got 14 minutes chat until the market opens. Ugh. Yeah, the huge joke in what I just said is that that's exactly what Coinbase earnings are already out, and they're exactly what I just said. No, Coin is out. I'm trolling whoever asked what they would show up as. I told them exactly what the numbers were. Coinbase earnings are out. They're out already. All right, guys, 14 minutes, 13 minutes left until Apple has their earnings call. You see the timer on the top left. Yeah, I'm just trolling you guys for Coinbase. Here, look. Coinbase numbers. I'll give you guys the update. Here's Coinbase numbers here. Coinbase posted. I'm going to put it up in chat. They're already out. Again, they posted exactly what I just said, which is 440 EPS on revenue of 1.64 billion is what Coinbase showed up as. Do you think the spike will hold until tomorrow opening? I think tomorrow we have non-farm payrolls and unemployment data, so a very big economic reports day. Yeah, I don't know. I know we got big stuff dropping tomorrow, though, and so I don't know what it's going to move markets and how it's going to move markets, but yeah. Will they debut AI is the real question during this earnings call. And we got 10 minutes left, but will they debut AI is the true, genuine question for this one. And I don't know. Will they debut AI? I don't know. Again, we'll see. You think Apple will be up next market open? I'm not sure. Apple, again, we do have non-farm payroll numbers. Payrolls are incredibly important numbers tomorrow. We also have the unemployment rate dropping tomorrow morning. Again, it's a very big economic report, very relevant report, very big economic report. And yeah, Those drop at 8:30 tomorrow morning. Right at 8:30 is when the economic reports are going to show up as. And so, again, we'll see. If they talk about AI, I think it will be their very first time ever in an earnings call. I think they're going to at least talk about AI to a certain extent. Who knows how much? I think that would be crazy not to, though. I think with all the other big Magnificent Seven stocks talking about AI, for lack of a better word, pandering to the AI community, I think Apple would be very dumb not to do that. Unless they have something up their sleeve that they're waiting to debut and that they don't want to let out just yet. That might be a reasonable reason to not say anything, but I think they're at least going to give hints behind that, at least small hints. They do have some conferences next week that are going to be pretty big and pretty important. So yeah. So again, we got about 10 minutes left until the earnings call starts. About 10 minutes left. And so Apple earnings are out. They did 110 billion share buyback. They boosted a quarterly dividend by 25 cents, or up to 25 cents, which is a 4% increase. They posted 153 EPS versus 150 expected, and revenue of 90.75 versus 90.01 billion expected. So better than expected EPS and revenue. Raised their divvy, and they also did 110 billion buyback announcement. So all good things for Apple. That's why it's shooting up to 185s. Yeah, but Meta actually bounced back a little bit after their earnings call. So Meta bounced back. They're at 440s right now. I bought the dip on Meta afterwards, and it was a good trade. We bought the dip. We bought it at 412s or whatever. I don't know exactly where we got in, but my current average price on Meta is 412.49. And so we bought the dip on Meta, and it's back up to like 440s now. So one of my favorite strategies, one of my favorite swing trading and investing strategies, is waiting for healthy companies that have low PE ratios like Meta to drop earnings and have massive overreactions. Meta dropped 20% from their earnings report, and they had pretty good earnings. They had decent numbers. They dropped 20%. And so when they did that, I bought it up. I think that's a really, again, it's one of my favorite swing trading strategies. And sometimes they turn into investments, because look at Apple break highs again. So Apple up to almost 186s. So up to 186s right now from 184s, where the previous highs were, still churning up. But yeah, I mean, if I'm wrong short term about that swing trading strategy, what I can do a lot of the time is I can then just sit on it long term, and most of these companies are going to be fine long term. Like an example, if I buy Meta on the dip and it keeps dipping, I can usually sit on it, bag hold it, for lack of a better word, and it's eventually going to come back and make me money, And I think that's the edge I want to play into versus shorting something like that. That edge seems, again, the example I always use is the longer I hold those long positions, the more likely I am to make money. Hey, Bruce, out of here, buddy. I'm sorry, buddy. Bruce, out of here. Hey, buddy. That's a good boy. That's a good boy. Look at Bruce right here. That's a good boy. But out of here, bud. Thank you, man. Bruce is a great dog. Rosie is really sweet, really dainty, really well trained. Reads body language very, very well. Bruce is clumsy, big. Bruce is big, clumsy, and just breaks things. I love him. I'm still sweet to him, but I don't want Bruce in my office. Bruce will mess my office up if I let him. And he will eat anything. Rosie's actually really picky, doesn't eat anything. Is super picky with food. Bruce will eat whatever we put in front of him. Just realized it's the first time Apple shows very good earnings. What? Of course it's not the first time Apple's had good earnings. Again, Apple's long-term chart looks like this, brother. Earnings-wise, this is their EPS graph over time. This is what their long-term chart looks like. So, I mean, it's definitely not the first good earnings report for Apple. But again, we'll see. Apple up to 185, 186. You have a 100% chance of making money on Mag 7 stocks if you hold for 10 years. No, you don't. You don't have a 100% chance. Nothing's 100% in markets. Markets can turn. You can get unlucky and the market can crash right before 10 years is up. At 9.5 years, the market can crash and you can lose money. It's just probability wise, though, you're almost certainly going to make money. It's just not 100%. I think Coinbase is down because of guidance. Hey, chat, we got 5 minutes here. 5 minutes. Let me switch my headphones out too. Calls coming out. So the earnings call happens in 5 minutes. Let me know if you can hear the music. Let me know if you can hear the music right now. If you can, let me know in chat. I'm trying to make sure you'll be able to hear the earnings call. You will, but I'm just trying to make sure. All right, chat, 5 minutes. 5 minutes. Again, the earnings call is coming soon. Still got about 2,000 people here watching live, so I appreciate the love. Thanks so much, chat. It's been a really fun earnings call. Really fun earnings season. NVIDIA earnings are going to be the chaotic one, man. NVIDIA earnings season are going to be chaos. The last NVIDIA earnings, we got almost 14,000 concurrent viewers, live viewers, simultaneous viewers. And so, yeah, this next one is May 22nd in about 20 days, about 3 weeks. And Apple just broke highs again. It's up to 186. So that'll be fun. We'll wait and see. Again, we're sitting here waiting for the earnings call to start for Apple. Good, they've got terrible hold music, but that's all right. Let me exit out of all this stuff. All right, chat. JP Morgan says it now expects OPEC alliance to extend voluntary production cuts beyond Q2. The ECB's Lane says the more data validates inflation coming back to the target, the more we'll be able to remove restrictions this year and next year. Yeah, I mean, it's kind of a water is wet scenario. The more inflation goes down, the more likely we are to cut rates. It's pretty standard in economics. Hey. Earnings call's about to start in 3 minutes. All right, chat. The earnings call starts in about 2.5 minutes, chat. 2.5 minutes. Yeah, I think it's fine to predict market crashes, but I think people have to accept when they're wrong about the market crashes, right? The real problem is that there's a lot of egos that float around. People just, instead of saying, oh man, the market looks resilient, they stay stubborn, they stay really stuck on market crashes, and the market keeps going higher and higher and higher and higher and higher. Before you know it, they're past the point where even if they did crash, we're still going to be above where they originally predicted it. And that's what I see a lot on YouTube is that, and again, I'm not saying we don't crash, but Apple earnings look resilient. Well, the real test will be NVIDIA earnings. NVIDIA earnings in a couple days. That's going to be the real big test. Y'all can hear the music, correct? Can y'all hear the music? Yes? Okay, good. Alright, yeah, we got about a minute left. My timer's exactly right. Interesting. Almost exactly right. Yeah, the Apple event happens next week, too. Yeah, I'm gonna have to turn off the music. I'm gonna mute the sound, and we're gonna get ready here. I'm gonna start. I like Apple because they play really loud hold music. You're not gonna be able to hear it. I'm gonna unmute it whenever it starts. But yeah. All right, Chad. Also, hit that subscribe button here, team. We are almost up to 136,000 subscribers. We need like 200 left. We got about 2,000 people here. Just little baby 200 subs. Do it now. I'll hate you forever if you don't. But stick around, guys. Let's watch the earnings call. All right, Chad. Here we go. All right. Again, I'm gonna unmute the music when it starts. It hasn't started yet. I'm gonna unmute it when it starts. Be ready. Yeah, we're already in sub only mode, I'm pretty sure. Yeah, we are. All right. Let Tim cook. All right. Is it time?
And welcome to the Aapl Q2 fiscal year 2024 earnings conference call. My name is Suhasini Chandramouli, Director of Investor Relations. Today's call is being recorded. Speaking first today is Apple's CEO, Tim Cook, and he'll be followed by CFO, Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements, which speak only as of the date they are made. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Suhasini. Good afternoon, everyone, and thanks for joining the call. Today, Apple is reporting revenue of $90.8 billion and an EPS record of $1.53 for the March quarter. We set revenue records in more than a dozen countries and regions. These include, among others, March quarter records in Latin America and the Middle East, as well as Canada, India, Spain, and Turkey. We also achieved an all-time revenue record in Indonesia, one of the many markets where we continue to see so much potential. In services, we set an all-time revenue record, up 14% over the past year. Keep in mind, as we described on the last call, in the March quarter a year ago, we were able to replenish iPhone channel inventory and fulfill significant pent-up demand from the December quarter COVID-related supply disruptions on the iPhone 14 Pro and 14 Pro Max. We estimate this one-time impact added close to $5 billion to the March quarter revenue last year. If we remove this from last year's results, our March quarter total company revenue this year would have grown. Despite this impact, we were still able to deliver the records I described. Of course, this past quarter, we were thrilled to launch Apple Vision Pro, and it has been so wonderful to hear from people who now get to experience the magic of spatial computing. They describe the impossible becoming possible right before their eyes, and they share their amazement and their emotions about what they can do now, whether it's reliving their most treasured memories or having a movie theater experience right in their living room. It's also great to see the enthusiasm from the enterprise market. For example, more than half of the Fortune 100 companies have already bought Apple Vision Pro units and are exploring innovative ways to use it to do things that weren't possible before. And this is just the beginning. Looking ahead, we're getting ready for an exciting product announcement next week that we think our customers will love. And next month, We have our Worldwide Developers Conference, which has generated enormous enthusiasm from our developers. We can't wait to reveal what we have in store. We continue to feel very bullish about our opportunity in generative AI. We are making significant investments, and we're looking forward to sharing some very exciting things with our customers soon. We believe in the transformative power and promise of AI, and we believe we have advantages that will differentiate us in this new era, including Apple's unique combination of seamless hardware, software, and services integration, groundbreaking Apple silicon with our industry-leading neural engines, and our unwavering focus on privacy, which underpins everything we create. As we push innovation forward, we continue to manage thoughtfully and deliberately through an uneven macroeconomic environment and remain focused on putting our users at the center of everything we do. Now let's turn to our results for the March quarter across each product category, beginning with iPhone. iPhone revenue for the March quarter was $46 billion, down 10% year over year. We faced a difficult compare over the previous year due to the $5 billion impact that I mentioned earlier. However, we still saw growth on iPhone in some markets, including mainland China, and according to Kantar, during the quarter, the two best-selling smartphones in urban China were the iPhone 15 and iPhone 15 Pro Max. I was in China recently where I had the chance to meet with developers and creators who are doing remarkable things with iPhone. And just a couple of weeks ago, I visited Vietnam, Indonesia, and Singapore, where it was incredible to see all the ways customers and communities are using our products and services to do amazing things. Everywhere I travel, people have such a great affinity for Apple, and it's one of the many reasons I'm so optimistic about the future. Turning to Mac, March quarter revenue was $7.5 billion, up 4% from a year ago. We had an amazing launch in early March with the new 13 and 15-inch MacBook Air. The world's most popular laptop is the best consumer laptop for AI, with breakthrough performance of the M3 chip and its even more powerful neural engine. Whether it's an entrepreneur starting a new business or a college student finishing their degree, users depend on the power and portability of MacBook Air to take them places they couldn't have gone without it. In iPad, revenue for the March quarter was $5.6 billion, 17% lower year over year due to a difficult compare with the momentum following the launch of M2 iPad Pro and the 10th generation iPad last fiscal year. iPad continues to stand apart for its versatility, power, and performance. For video editors, music makers, and creatives of all kinds, iPad is empowering users to do more than they ever could with a tablet. Across wearables, home, and accessories, March quarter revenue was $7.9 billion, down 10% from a year ago due to a difficult launch compare on Watch and AirPods. Apple Watch is helping runners go the extra mile on their wellness journeys, keeping hikers on course with the latest navigation capabilities in watchOS 10, and enabling users of all fitness levels to live a healthier day. Across our watch lineup, we're harnessing AI and machine learning to power life-saving features like irregular rhythm notifications and fall detection. I often hear about how much these features mean to users and their loved ones, and I'm thankful that so many people are able to get help in their time of greatest need. As I shared earlier, we set an all-time revenue record in services with $23.9 billion, up 14% year over year. We also achieved all-time revenue records across several categories and geographic segments. Audiences are tuning in on screens large, small, and spatial, and are enjoying Apple TV Plus originals like Palm Royale and Sugar. And we have some incredible theatrical releases coming this year, including Wolves, which reunites George Clooney and Brad Pitt. Apple TV Plus productions continue to be celebrated as major awards contenders. Since launch, Apple TV Plus productions have earned more than 2,100 award nominations and 480 wins. Meanwhile, we're enhancing the live sports experience with a new iPhone app, Aapl Sports. This free app allows fans to follow their favorite teams and leagues with real-time scores, stats, and more. Aapl Sports is the perfect companion for MLS Season Pass subscribers. Turning to retail, our stores continue to be vital spaces for connection and innovation. I was delighted to be in Shanghai for the opening of our latest flagship store. The energy and enthusiasm from our customers was truly something to behold. And across the United States, our incredible retail teams have been sharing Vision Pro demos with customers, delighting them with the profound and emotional experience of using it for the very first time. Everywhere we operate, in everything we do, we're guided by our mission to enrich users' lives and leave the world better than we found it. Whether we're making Apple Podcasts more accessible with a new transcripts feature, or helping to safeguard iMessage users' privacy with new protections that can defend against advances in quantum computing. Our environmental work is another great example of how innovation and our values come together. As we work toward our goal of being carbon neutral across all of our products by 2030, we are proud of how we've been able to innovate and do more for our customers while taking less from the planet. Since 2015, Apple has cut our overall emissions by more than half, while revenue grew nearly 65% during that same time period. And we're now using more recycled materials in our products than ever before. Earlier this spring, we launched our first ever product to use 50% recycled materials with a new M3-powered MacBook Air. We're also investing in new solar and wind power in the US and Europe, both to power our growing operations and our users' devices. And we're working with partners in India and the US to replenish 100% of the water we use in places that need it most, with the goal of delivering billions of gallons of water benefits over the next 2 decades. Through our Restore Fund, Apple has committed $200 million to nature-based carbon removal projects. And last month, we welcomed 2 supplier partners as new investors who will together invest up to an additional $80 million in the fund. Whether we're enriching lives of users across the globe or doing our part to be a force for good in the world, we do everything with a deep sense of purpose at Apple. And I'm proud of the impact we've already made at the halfway point in a year of unprecedented innovation. I couldn't be more excited for the future we have ahead of us, driven by the imagination and innovation of our teams and the enduring importance of our products and services in people's lives. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. Revenue for the March quarter was $90.8 billion, down 4% from last year. Foreign exchange had a negative year-over-year impact of 140 basis points on our results. Products revenue was $66.9 billion, down 10% year-over-year, due to the challenging compare on iPhone that Tim described earlier, which was partially offset by strength from Mac. And thanks to our unparalleled customer satisfaction and loyalty and a high number of customers who are new to our products, our installed base of active devices reached an all-time high across all products and all geographic segments. Services revenue set an all-time record of $23.9 billion, up 14% year-over-year, with record performance in both developed and emerging markets. Company gross margin was 46.6%, up 70 basis points sequentially, driven by cost savings and favorable mix to services, partially offset by leverage. Products gross margin was 36.6%, down 280 basis points sequentially, primarily driven by seasonal loss of leverage and mix, partially offset by favorable costs. Services gross margin was 74.6%, up 180 basis points from last quarter due to a more favorable mix. Operating expenses of $14.4 billion were at the midpoint of the guidance range we provided and up 5% year over year. Net income was $23.6 billion, diluted EPS was $1.53, and a March quarter record, and operating cash flow was strong at $22.7 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue was $46 billion, down 10% year over year, due to the almost $5 billion impact from a year ago that Tim described earlier. Adjusting for this one-time impact, iPhone revenue would be roughly flat to last year. Our iPhone active install base grew to a new all-time high in total and in every geographic segment. And during the March quarter, we saw many iPhone models as the top-selling smartphones around the world. In fact, according to a survey from Kantar, an iPhone was the top-selling model in the US, urban China, Australia, the UK, France, Germany, and Japan. And the iPhone 15 family continues to be very popular with customers. 451 Research recently measured customer satisfaction at 99% in the US. Mac revenue was $7.5 billion, up 4% year over year, driven by the strength of our new MacBook Air, powered by the M3 chip. Customers are loving the incredible AI performance of the latest MacBook Air and MacBook Pro models. And our Mac installed base reached an all-time high, with half of our MacBook Air buyers during the quarter being new to Mac. Also, customer satisfaction for Mac was recently reported at 96% in the US. iPad generated $5.6 billion in revenue, down 17% year over year. iPad continued to face a challenging compare against the launch of the M2 iPad Pro and iPad 10 generation from last year. At the same time, the iPad install base has continued to grow and is at an all-time high, as over half of the customers who purchased iPads during the quarter were new to the product. In addition, the latest reports from 451 Research indicated customer satisfaction of 96% for iPad in the US. Wearables, home, and accessories revenue was $7.9 billion, down 10% year over year, due to a difficult launch compare. Last year, we had the continued benefit from the launches of the AirPods Pro 2nd generation, the Watch SE, and the first Watch Ultra. Apple Watch continues to attract new customers, with almost two-thirds of customers purchasing an Apple Watch during the quarter being new to the product, sending the Apple Watch install base to a new all-time high. And customer satisfaction was recently measured at 95% in the US. In services, as I mentioned, total revenue reached an all-time record of $23.9 billion, growing 14% year over year, with our installed base of active devices continuing to grow at a nice pace. This provides a strong foundation for the future growth of the services business as we continue to see increased customer engagement with our ecosystem. Both transacting accounts and paid accounts reached a new all-time high, with paid accounts growing double digits year over year. And paid subscriptions showed strong double-digit growth. We have well over 1 billion paid subscriptions across the services on our platform, more than double the number that we had only 4 years ago. We continue to improve the breadth and quality of our current services, from creating new games on arcade and great new shows on TV Plus, to launching additional countries and partners for Apple Pay. Turning to enterprise, our customers continue to invest in Apple products to drive productivity and innovation. We see more and more enterprise customers embracing the Mac. In healthcare, Epic Systems, the world's largest electronic medical record provider, recently launched its native app for the Mac, making it easier for healthcare organizations like Emory Health to transition thousands of PCs to the Mac for clinical use. And since the launch of Vision Pro last quarter, many leading enterprise customers have been investing in this amazing new product to bring spatial computing apps and experiences to life. We are seeing so many compelling use cases, from aircraft engine maintenance training at KLM Airlines, to real-time team collaboration for racing at Porsche, to immersive kitchen design at Lowe's. We couldn't be more excited about the spatial computing opportunity in enterprise. Taking a quick step back, when we look at our performance during the first half of our fiscal year, total company revenue was roughly flat to the prior year, in spite of having one less week of sales during the period and some foreign exchange headwinds. We were particularly pleased with our strong momentum in emerging markets, as we set first half revenue records in several countries and regions, including Latin America, the Middle East, India, Indonesia, the Philippines, and Turkey. These results, coupled with double-digit growth in services and strong levels of gross margin, drove a first half diluted EPS record of $3.71, up 9% from last year. Let me now turn to our cash position and capital return program. We ended the quarter with $162 billion in cash and marketable securities. We repaid $3.2 billion in maturing debt, and commercial paper was unchanged sequentially, leaving us with total debt of $105 billion. As a result, net cash was $58 billion at the end of the quarter. During the quarter, we returned over $27 billion to shareholders, including $3.7 billion in dividends and equivalents, and $23.5 billion through open market repurchases of 130 million Aapl shares. Given the continued confidence we have in our business now and into the future, our board has authorized today an additional $110 billion for share repurchases as we maintain our goal of getting to net cash neutral over time. We're also raising our dividend by 4% to 25 cents per share of common stock, and we continue to plan for annual increases in the dividend going forward, as we've done for the last 12 years. This cash dividend will be payable on May 16, 2024, to shareholders of record as of May 13, 2024. As we move ahead into the June quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to at the beginning of the call. The color we are providing today assumes that the macroeconomic outlook doesn't worsen from what we are projecting today for the current quarter. We expect our June quarter total company revenue to grow low single digits year over year, in spite of a foreign exchange headwind of about 2.5 percentage points. We expect our services business to grow double digits at a rate similar to the growth we reported for the first half of the fiscal year. And we expect iPad revenue to grow double digits. We expect gross margin to be between 45.5% and 46.5%. We expect OpEx to be between $14.3 billion and $14.5 billion. We expect OI&E to be around $50 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from Mike Ng with Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you very much for the question. I have 2. First, I'll ask about the June quarter guidance. The revenue outlook for low single digits growth. I was wondering if you could run through some of the product assumptions, iPhone, like what kind of gives you confidence around that? And then on the services momentum, what was better than expected in the quarter? And then I just have a quick follow-up.
Hey, Mike, it's Luca. On the outlook, what we said is we expect to grow low single digits in total for the company. We expect services to grow double digits at a rate that is similar to what we've done in the first half of our fiscal year. And we've also mentioned that iPad should grow double digits. This is the color that we're providing for the June quarter. In services, we've seen a very strong performance across the board. We've mentioned, we've had records in several categories, in several geographic segments. It's very broad-based. Our subscription business is going well. Transacting accounts and paid accounts are growing, paid accounts are growing, double digits. And also, we've seen a really strong performance both in developed and emerging markets. So very pleased with the way the services business is going.
Great, thank you. And I wanted to ask about, as Apple leans more into AI and generative AI, should we expect any changes to the historical CapEx cadence that we've seen in the last few years of about $10 to $11 billion per year, or any changes to how we may have historically thought about the split between tooling, data center, and facilities? Thank you very much.
Yeah, we are all obviously very excited about the opportunity with Gen AI. We obviously are pushing very hard on innovation on every front, and we've been doing that for many, many years. Just during the last 5 years, we've spent more than $100 billion in research and development. As you know, on the CapEx front, we have a bit of a hybrid model where we make some of the investments ourselves. In other cases, we share them with our suppliers and partners. On the manufacturing side, we purchase some of the tools and manufacturing equipment. In some other cases, our suppliers make the investment. And we do something similar on the data center side. We have our own data center capacity, and then we use capacity from third parties. It's a model that has worked well for us historically, and we plan to continue along the same lines going forward.
Excellent. Thank you very much.
Awesome. Thank you, Mike. Operator, can we have the next question, please?
Our next question is from Wamsi Mohan with Bank of America. Please go ahead.
Yes, thank you so much. Tim, can you talk about the implications to Apple from the changes driven by EU DMA? You've had to open up third-party app stores. Clearly, this poses some security risks on the one hand, which can dilute the experience, but also lower payments from developers to Apple. What are you seeing developers choose in these early days and consumers choose in terms of these third-party app stores? And I have a follow-up.
It's really too early to answer the question. We just implemented in March, as you probably know, in the European Union, the alternate app stores and alternate billing, et cetera. So we're focused on complying while mitigating the impacts to user privacy and security that you mentioned. And so that's our focus.
Okay, thank you, Tim. And Luca, I was wondering if you could comment a bit on the product gross margins, the sequential step down. You noted mix and leverage. Any more color on the mix, if you could share, if customers are at all starting to mix down across product lines, or is this more a mix across product lines? Just trying to get some color on customer behavior given some of the broader inflationary pressures. Thank you so much.
On a sequential basis, yes, we were down. It's primarily the fact that we had a slightly different mix of products than the previous one. Obviously, leverage plays a big role as we move from the holiday quarter into a more typical quarter. So I would say primarily leverage and a different mix of products. I mean, we haven't seen anything different. In terms within the product categories, we haven't seen, anything particular.
Thank you so much.
Thanks, Wamsi. We'll take the next question, please.
Our next question is from Eric Woodring with Morgan Stanley. Please go ahead.
Great. Thanks so much for taking my questions. Maybe my first one, Tim, you've obviously mentioned your excitement around generative AI multiple times. I'm just curious how Apple is thinking about the different ways in which you can monetize this technology, because historically software upgrades haven't been a big factor in driving product cycles. And so could AI be potentially different? How could that impact replacement cycles? Is there any services angle you'd be thinking? Any early color that you can share on that? And then I have a follow-up, please. Thanks.
I don't want to get in front of our announcements, obviously. I would just say that we see generative AI as a very key opportunity across our products. And we believe that we have advantages that set us apart there. And we'll be talking more about it as we go through the weeks ahead.
Okay, very fair. Thank you. And then, Luca, maybe to just follow up on Wamsi's comments or question, there's a broad concern about the headwind that rising commodity costs have on your product gross margins. Wondering if you could just clarify for us, if we take a step back and look at all of the components and commodities that go into your products kind of collectively, are you seeing these costs rising? Are they falling? What tools do you have to try to help mitigate some rising costs, if at all, rising input costs, if at all? Thank you so much.
Yes, I mean, during the last quarter, commodity costs and in general component costs have behaved favorably to us. On the memory front, prices are starting to go up. They've gone up slightly during the March quarter. But in general, I think it's been, a period, not only this quarter, but the last several quarters where, commodities have behaved well for us. Commodities go in cycles, and so there's obviously always that possibility. Keep in mind that we are starting from a very high level of gross margins. We reported 46.6%, which is something that we haven't seen in our company in decades. And so we're starting from a good point. As you know, we try to buy ahead when, the cycles are favorable to us. And so we will try to mitigate if there are headwinds. But in general, we feel, particularly for this cycle, we are in good shape.
Thank you so much.
Great. Thank you, Eric. Operator, we'll take the next question, please.
Our next question is from Ben Reitzes with Melius. Please go ahead.
Hey, thanks for the question. And hey, Tim, I was wondering if I could ask the China question again. Is there any more color from your visit there that gives you confidence that you've reached a bottom there and that it's turning? I know you've continued to be confident there in the long term. Just wondering if there was any color as to when you think that the tide turns there. Thanks a lot, and I have a follow-up.
Yeah, Ben, if you look at our results in Q2 for Greater China, we were down 8. That's an acceleration from the previous quarter in Q1. And the primary driver of the acceleration was iPhone. And if you then look at iPhone within mainland China, we grew on a reported basis. That's before any kind of normalization for the supply disruption that we mentioned earlier. And if you look at the top selling smartphones, the top 2 in urban China are iPhones. And while I was there, it was a great visit. And we opened a new store in Shanghai, and the reception was very warm and highly energetic. And so I left there having a fantastic trip and enjoyed being there. And so I maintain a great view of China in the long term. I don't know how each and every quarter goes and each and every week, but over the long haul, I have a very positive viewpoint.
Okay, hey, thanks, Tim. And then my follow-up, I want to ask this carefully though. There's a fear out there that you may lose some traffic acquisition revenue. And I was wondering if you thought, AI from a big picture, and it doesn't have to be, on a long-term basis. I mean, from a big picture, if AI is an opportunity for you to, continue to monetize your mobile real estate, just how maybe investors can think about that from a big picture, just given that's been one of the concerns that's potentially been an overhang, of course, due to a lot of the news and the media around some of the legal cases. And I was wondering if there's just a big picture color you could give that makes us kind of think about it better and your ability to sort of continue to monetize that real estate? Thanks a lot.
I think AI, generative AI and AI, both are big opportunities for us across our products. And we'll talk more about it in the coming weeks, but I think there are numerous ways there that are great for us, and we think that we're well positioned.
Thanks, Tim.
Yep.
Thanks, Ben. Can we have the next question, please?
Our next question is from Krish Sankar with TD Cowen. Please go ahead.
Yeah, hi, thanks for taking my question. Again, sorry to beat the AI horse, but Tim, I know you don't want to reveal a lot, but I'm just kind of curious because last quarter you spoke about how you're getting traction in enterprise. Is the AI strategy going to be both consumer and enterprise, or is it going to be one after the other? Any color would be helpful, and then a follow-up for Luca.
Our focus on enterprise has been, and through the quarter and the quarters that preceded it, on selling iPhones and iPads and Macs, and we recently added Vision Pro to that, and we're thrilled with what we see there in terms of interest from big companies buying some to explore ways they can use it. And so I see enormous opportunity in the enterprise. I wouldn't want to cabin that to AI only. I think there's a great opportunity for us around the world in enterprise.
Got it. Very helpful. And then for Luca, I'm kind of curious on, given the macro environment, on the hardware side, are you seeing a bias towards standard iPhone versus the Pro models? The reason I'm asking the question is that there's a weaker consumer spending environment, yet your services business is still growing and has amazing growth margins. So I'm just trying to square the circle over there. Thank you.
I'm not sure I fully understand the question, but in general, what we are seeing on the product side, we continue to see a lot of interest at the top of the range of our products. And I think it's a combination of consumers wanting to purchase the best product that we offer in the different categories and our ability to make those purchases more affordable over time. We've introduced several financing solutions, from installment plans to trade-in programs, that reduce the affordability threshold, and therefore customers want to buy at the top of the range. That is very valuable for us in developed markets, but particularly in emerging markets where the affordability issues are more pronounced. But in general, over the last several years, and that is also reflected in our gross margins, over the last several years, we've seen this trend, which we think is pretty sustainable.
Got it. Thank you very much, Luca. Thanks, Tim.
Thank you, Krish. Operator, we'll have the next question, please.
Our next question is from Amit Daryanani with Evercore. Please go ahead.
Thanks for taking my question. I have two as well. I guess first off on capital allocation, you folks have about $58 billion of net cash right now. As you think about eventually getting to this net cash neutral target, do you think at some point Apple would be open to taking on leverage on the balance sheet and continuing the buyback program? Or is it more like once you get to this neutral position, it's going to be about returning free cash flow back to shareholders? I'm just wondering, how do you think about leverage on your balance sheet over time, and what sort of leverage do you think you'd be comfortable taking on?
Yeah, it's Luca. I would say one step at a time. We have put out this target of getting to net cash neutral several years ago, and we're working very hard to get there. Our free cash flow generation has been very strong over the years, particularly the last few years. And so, as you've seen this year, we've increased the amount that we're allocating to the buyback. For the last couple of years, we were doing $90 billion. Now we're doing $110 billion. So let's get there first. It's going to take a while still. And then when we are there, we're going to reassess and see what is the optimal capital structure for the company at that point in time. Obviously, there's going to be a number of considerations that we will need to look at when we get there.
Fair enough. I figure it's worth trying anyway. If I go back to this China discussion a bit, and Tim, I think your comments around growth in iPhones in mainland China is really notable. Could you step back? I mean, these numbers are still declining, at least Greater China on a year-over-year basis in aggregate. Maybe just talk about what are you seeing from a macro basis in China, and then at least the annual decline or year-over-year decline that we're seeing. Do you think it's more macro-driven or more competitive-driven over there? That would be helpful.
Yeah, I can only tell you what we're seeing, and so I don't want to present myself as a economist. So I'll steer clear of that. From what we saw was an acceleration from Q1, and it was driven by iPhone. And iPhone in mainland China, before we adjust for this 5 billion impact that we talked about earlier, did grow. That means the other products didn't fare as well, and so we clearly have work there to do. I think it has been and is through last quarter the most competitive market in the world, and I wouldn't say anything other than that. I've said that before, and I believe that it was last quarter as well. And but if you step back from the 90-day cycle, what I see is a lot of people moving into the middle class. We try to serve customers very well there, and have a lot of happy customers, and you can kind of see that in the latest store opening over there. And so I continue to feel very optimistic.
Great, thank you.
Thanks, Amit. Operator, we'll take the next question, please.
Our next question is from David Vogt with UBS. Please go ahead.
Great. Thanks, guys, for taking my question. I'm going to roll the two together so you guys have them both. So, Luca, obviously I'm trying to parse through the outlook for the June quarter. And just based on the quick math, it looks like, all things being equal, given what you said, the iPhone business is going to be down mid-single digits again in the June quarter. And if that's the case, and maybe this is for Tim, obviously, how are you thinking about the competitive landscape in the context of what you just said, maybe outside of China? And what changes sort of, the consumer demand or receptivity to new devices? Because we've been in this malaise for a while. Is it really this AI initiative that a lot of companies are pursuing? And do you think that changes sort of the demand drivers going forward? Or is it just really more of a timing issue in terms of the replacement cycle is a little bit long in the tooth, and we see a bit of an upgrade cycle at some point, maybe later this year into next year? Thanks.
I do see a key opportunity, as I'd mentioned before, with generative AI, with all of our devices, or the vast majority of our devices. And so I think that if you look out, that's not within the next quarter or so, and we don't guide at the product level, but I'm extremely optimistic. And so that's kind of how I view it. In terms of I'll let Luca comment on the outlook portion of it. I think if you step back on iPhone, though, and you make this adjustment from the previous year, our Q2 results would be flattish on iPhone. And so that's how we performed in Q2.
Yeah, David, on the outlook, I'll only repeat what we said before, and this is the color that we're providing for the quarter. We do expect to grow in total, low single digits. We do expect services to grow double digits, and we expect iPad to grow double digits. For the rest, I'll let you make assumptions, and then we will report 3 months from now.
Great. Thanks, guys. I'll get back on the queue.
Thanks, David. Operator, we'll take the next question, please.
Our next question is from Samik Chatterjee with JP Morgan. Please go ahead.
Hi, thanks for taking my question, and I have a couple as well. Maybe for the first one, your services growth accelerated from 11% growth to 14. If you can sort of dig into the drivers of where or which parts of services did you really see that acceleration, and why it isn't a bit more sustainable as we think about the next quarter, because I believe you're guiding more to sort of averaging out the first half of the year for the next quarter. So just curious, what were the drivers and why not have it a bit more sustainably sort of improve as we go through the remainder of the year? I have a quick follow-up. Thank you.
So a number of things on services. First of all, the overall performance was very strong. As I said earlier, all-time records in both developed and emerging markets. So we see our services do well across the world. Records in many of our services categories. There are some categories that are growing very fast also because they are relatively smaller in the scheme of our services business, like cloud, video, payment services. Those all set all-time revenue records. So we feel very good about the progress that we're making in services. As we go forward, I'll just point out that if you look at our growth rates a year ago, they improved during the course of the fiscal year last year. So the comps for the services business become a bit more challenging as we go through the year. But in general, as I mentioned, we still expect to grow double digits in the June quarter at a rate that is very similar to what we've done in the first half.
Got it. And for my follow-up, if I can ask you more specifically about the India market, obviously you continue to make new records in terms of revenue in that market. How much of the momentum you're seeing would you associate with your sort of retail strategy in that market, retail expansion relative to maybe some of the supply change or the sort of manufacturing changes or strategy you've undergone or taken in that market itself? Any thoughts around that would be helpful.
Sure. We did grow strong double digit. And so we were very, very pleased with that. It was a new March quarter revenue record for us. As you know, I've said before, I see it as a incredibly exciting market, and it's a major focus for us. In terms of the operational side or supply chain side, we are producing there. From a pragmatic point of view, you need to produce there to be competitive. And so, yes, the two things are linked from that point of view. But we have both operational things going on, and we have go-to-market and initiatives going on. We just opened a couple of stores last year, as you know, and we see enormous opportunity there. We're continuing to expand our channels and also working on the developer ecosystem as well. And we've been very pleased that there's a rapidly growing base of developers there. And so we're working all of the entire ecosystem from developer to the market to operations, the whole thing. And I could not be more excited and enthusiastic about it.
Got it. Thank you. Thanks for the rip.
Yeah.
Thank you, Samik. Operator, we'll have the next question, please.
Our next question is from Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for taking the questions, and I think I have to have two as well, like everybody else. I guess I'm going to go back to the China question. I guess at a high level, the simple question is, when we look at the data points that have been repeatedly reported throughout the course of this quarter, I'm curious, Tim, what are we missing? Like, where do you think people are missing, Apple's iPhone traction within the China market, just at a high level, given the data points that were reported throughout this course of the last quarter?
I can't address the data points. I can only address what our results are. And, we did accelerate last quarter, and the iPhone grew in mainland China. So that's what the results were. I can't bridge to numbers we didn't come up with.
Okay. And then as a quick follow-up, I know you guys haven't talked about this, quantified it in quite some time, but I'm curious of how we would characterize the channel inventory dynamics for iPhone.
Sure. For the March quarter, we decreased channel inventory during the quarter. We usually decrease channel inventory during the Q2 timeframe, so that's not unusual. And we're very comfortable with the overall channel inventory.
Thank you.
Yeah.
Thank you, Aaron. Operator, we'll take the next question, please.
Our next question is from Richard Kramer with Arete Research. Please go ahead.
Thanks very much. I'm not going to ask about China, but you regularly call out all the rapid growth in many other emerging markets. So is Apple approaching a point where all those other emerging markets in aggregate might cross over to become larger than your current 70 billion Greater China segments? And maybe investors could look at that for driving growth for the wider business. And then I have a follow-up for Luca. Thanks.
I think, Richard, you're asking a really interesting question. We were looking at something similar recently. Obviously, China is by far the largest emerging market that we have. But when we start looking at places like India, like Saudi, like Mexico, Turkey, of course, Brazil and Mexico, and Indonesia, the numbers are getting large, and we're very happy because these are markets where our market share is low, the populations are large and growing, and our products are really making a lot of progress in those markets. The level of excitement for the brand is very high. Tim was in Southeast Asia recently, and the level of excitement is incredibly high. So it is very good for us, and certainly the numbers are getting larger all the time, and so the gap, as you compare it to the numbers in China, is reducing, and hopefully that trajectory continues for a long time.
Okay, and then as a follow-up, maybe for either of you, I mean, you're coming up on 4 years from what was an incredibly popular iPhone 12 cycle, and given you're struggling to reach your net neutral cash position, and your margins are at sort of near highs, do you see ways to deploy capital more to spur replacement demand in your installed base, either with greater device financing, more investment in marketing, more promotions? I mean, do you feel like you need to produce those sort of margins, or is it more important to spur growth with replacement? Thanks.
I think innovation spurs the upgrade cycle, and as one thing, of course, there's economic factors as well that play in there, and what kind of offerings there are from our carrier partners and so forth. And so there's a number of variables in there. But we work all of those, and we price our products for the value that we're delivering, and so that's how we look at it.
And if I can add to Tim's comments, Richard, one of the things that when you look over the long arc of time that maybe is not fully understood is that we've gone through a long period of very strong dollar, And what that means, given that our company sells more than 60% of our revenue is outside the United States, the demand for our products in those markets is stronger than the results that we report, just because of the translation of those local currencies into dollars, right? And so that is something to keep in mind as you look at our results, right? And so we are making all the investments that are needed. And Tim has talked about innovation. Obviously, we made a lot of progress with financing solutions, with trading programs, and so on. And we will continue to make all those investments.
Okay, super. Thanks, guys.
Thank you, Richard. Operator, can we take our last question, please?
Our next question is from Atif Malik with Citi. Please go ahead.
Hi, thank you for taking my questions. I have two questions as well. First, for Tim, for enterprise specifically, what are some of the top 2 or 3 use cases on Vision Pro you're hearing most excitement? And then I have a follow-up for Luca.
The great thing is I'm hearing about so many of them. I wouldn't say that one has emerged as the top right now. The most impressive thing is that similar to the way people use a Mac, you use it for everything. People are using it for many different things in enterprise, and that varies from field service to training to healthcare related things like preparing a doctor for pre-op surgery or advanced imaging. And so it's commands, control centers. And so it's an enormous number of different verticals. And, our focus is growing that ecosystem and getting more apps and more enterprises engaged. And the event that we had recently, I can't overstate the enthusiasm in the room. It was extraordinary. And so we're off to a good start, I think, with enterprise.
Great. And then Luca, I believe you mentioned that for the March quarter, the commodity pricing environment was favorable. Can you talk about what you're assuming for commodity pricing on memory, et cetera, for the June quarter and maybe for the full year?
Yes, we provide guidance just for the current quarter. So I'll tell you about the guidance. We're guiding to a very high level of gross margins, 45.5% to 46.5%. Within that guidance, we expect memory to be a slight headwind, and not a very large one, but a slight headwind. And the same applies for foreign exchange. Foreign exchange will have a negative impact sequentially of about 30 basis points.
Thank you.
Thank you, Atif. A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay is 866-5.
All right, guys. So that is it for the Apple earnings call. Yeah, I'm sitting here talking to Red Green. Like, listen, I'm going to explain, again, it's really interesting because bears get so emotional. And again, I'm not necessarily against you, but acting like declining revenue, again, if you look at this chart objectively without emotion, it makes perfect sense. All right. Number one, every single time you have this December quarter, again, look, let me look at this. Look, December quarter, let me scroll down, 12/31, spike, 12/31, spike, 12/31, spike. What do you get the next quarter, guys? You get declining revenue, 97 afterwards, 94 afterwards. You get declining revenue after the seasonality of the holiday quarter. It's seasonality. It happens every time. It's very predictable. It's very predictable. And so with the last quarter, us getting a really big spike in revenue like we do from seasonality, it's not a shock to the world that we're going to have a decline in revenue quarter to quarter. It's not a shock. That's very obvious. It's very self-evident. We can't use the declining quarter to say, oh, well, Apple's failing. It's a crash. What do we do? like the decline after the seasonality of the holidays is not a shock, guys. Again, I don't understand how you could look at this is their revenue graph, like the revenue graph trend. I don't know how we can look at this trend and argue Apple doesn't look like a very strong company. Of course it does. It's one of the strongest companies in the world. And again, listen, if you're consistently showing up to the biggest companies in the world's earnings call upset that they're doing well, again, somewhere you've been misled. I get, again, that's the best thing I could say. That's the truth. That's the most truthful thing I could say is somewhere you've been misled. And again, it's all love, brother. It's all love, man. We can agree to disagree. It's all good. Again, if you want to check out our sponsors, check out Apex. If you want to learn to day trade, do not put up the money up yourself. Most day traders lose. So if you put up 5K, you're probably going to lose 5K if you try to day trade it yourself. Instead, limit your risk with a funded account program. Apex will give you a demo, and they'll test your skill with a demo. If you pass that test, and it's a 1-to-1 ratio on the base one, they give you a 25K demo. And futures, if you can make 1,500 without losing 1,500 first, they fund you 25K with a 90% split. And in futures, it's very similar to day trading stocks. You can buy market, sell market, very similar. You can literally buy the S&P, the NASDAQ, basically the SPY and Q price action. And to be fair, I think most day traders lose. Most day traders are going to lose, and so it's a lot cheaper to lose here than to put up 5K and lose that. But again, they're a sponsor of mine. I'm biased. If you want to check them out, here's the link. Great way to help support the channel. Is to check it out. You can use coupon code BT, beginner trading BT. We'll get you the max discount at all times. And again, listen, betting against the strongest companies in the world is silly. Like, I get it. The Big Short made people idolize these big short traders predicting these market crashes. I get it. I think people are so stubborn with crash predictions. They're so stubborn. Like, listen, guys. The strongest companies in the world are probably going to continue to do well. Apple is used by almost everybody in the United States. Almost everybody in the United States uses them. Again, this is their long-term revenue graph. Okay, even their recent revenue graph. Like, look at the last time their revenue spiked up here. Their last quarter was their second most successful quarter of all time ever, right? Revenue-wise, And so again, we can say that's weak. I think y'all have been misled. And again, it's all love. Again, there's a reason Apple's gapping up. Again, if you want to check out one of our other sponsors, check out Chart Prime. It's a trading view indicator service you could use in stocks, crypto, forex, futures. Great way to learn how to day trade. And it'll kind of show you these patterns. Look, I haven't even back tested it yet today, but if we go to this here, again, you can see I can put the market oracle up, and this is a trading view indicator. Again, you can use it in stocks, crypto, forex, futures. Try it out. Just back test it yourself. And again, we can look how powerful this can be. Okay, so let's look at some of these levels here. Again, look at the strong signals. The strong ones are really where it's at. So let's back test just the strong signals. Red one here. This is a 5-minute chart. This is hours of red action. Strong signal here. Hours of red action. Buy signal here right before this huge spike, and hours of bullish action. Strong signal here. Beautiful breakdown for like an hour maybe. Strong buy signal here. Beautiful bounce afterwards. This one was probably wrong. Strong buy signal here. Beautiful rip up. This one was probably wrong. And so again, that's two strong signals that were wrong. Let's see. And then this red one here showed up here, and then beautiful breakdowns afterwards. So that's 2 out of how many, chat? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9. 2 out of 9 that were wrong. I can't guarantee you're going to make money. They're a sponsor. I'm biased. They pay me money. And so, of course, I'm going to be biased in their favor. You would be biased, too, if they paid you money. But I can't fake this. Look, strong buy signal here. I even missed this one. So it's 2 out of 10. Look at this strong buy signal. Hours of green action here. And so, again, back test it yourself. Check it out. Here's the link if you want to help support the channel. Check it out. It's like $40 a month. There's a lot of stuff that they offer too. Oscillators, backtesters, screeners. You can use it with anything with a symbol on TradingView. Check it out. Here's the link. And yeah, guys, y'all be good. Again, red, green. None of what you're saying is any type of argument towards what I said. You said their revenue was declining. I showed you why. It declines every time after the holiday season, and then you pivot to something else, and now you're talking about, I wasn't around in 2008. We're not talking about any of that stuff, brother. We're not talking about any of that stuff. Your argument was their revenue was declining. I'm showing you it declines every time after the holiday quarter. Again, it's very predictable, Anyways, it's all love. Like I said, y'all be safe. I'll see you guys later. Y'all be good. Have a great day, guys. Be back tomorrow. Tomorrow we got non-farm payrolls, unemployment data coming out tomorrow. A very big report. We might get choppiness leading into it. And yeah, y'all be good, guys. I'll see you guys later.